Hey everyone, hope you're doing well. I'm very excited about this conversation with Clinton Donnelly. It's all about crypto taxes 101. Taxes is one of those things that everyone always forgets about. They don't really understand. And every single time that they talk to an accountant or a tax strategist, they get told a bunch of things and it kind of just goes right over their head. So I thought that doing this with Clinton would be a great way for people not only to learn about taxes and how the treatment of cryptocurrencies fits into that, but also to ask questions. So throughout this entire conversation, feel free to drop any questions you have into the chat and I'll read them out at the end. All right, let's bring Clinton on out here so that we can get started. Clinton, how are you?
I'm doing great, Pomp. Pleasure to be here. Thanks for having me.
Absolutely. Before I get to my first question, I thought maybe you could just quickly give people a introduction to yourself and some of your background.
I got an advanced law degree in international financial regulation, which gives me a broad view of the financial issues. My company is the largest company doing crypto tax returns that have cryptocurrency in it. We have 25 employees. I'm also anti-money laundering specialist in the area of cryptocurrencies. It's also what I got my law degree dissertation in. So I think I bring a unique perspective. And we handle the hardest of clients out there in terms of their tax returns. And we defend them in audits with the IRS, where nobody's done as many audit defenses as we have.
Awesome. So maybe what we could do here is let's kind of go through exactly what is happening for the treatment of cryptocurrencies with taxes. Obviously, there's the United States and kind of how the US is looking at this, and then there's many countries around the world. But when you first start looking at this, like why should people be paying attention specifically to how cryptocurrencies are treated rather than any other asset, whether it's a currency, an equity, or anything else?
Well, under US tax code, the cryptocurrencies are considered property. Property is taxed on the gain when you sell them. What you buy it for, called the cost basis, versus minus subtracted from the proceeds of the sale, is the gain. Most other countries are doing a similar thing. There's variations in how they calculate the cost basis, but most countries are doing that. Each country will treat cryptocurrencies as property. They will vary in terms of what the tax rate is that they charge, whether the short-term and the long-term rates.
So you've served tons and tons of clients. You help them prepare their taxes. You help them actually defend against audits. You've even gone as far as you mentioned in terms of money laundering, et cetera. What are maybe some of the biggest missteps that you see people making when it comes to cryptocurrency and their taxes?
Well, the biggest misstep is not reporting your crypto gains in your tax return at all. We know from statistics from the industry and from the IRS that only 25% of all crypto owners are reporting their crypto income on their US tax return. So that's a big issue. If you're not reporting that income, and if it's significant enough, you're exposed to losing your statute of limitations protection, where the IRS may come after you for fraud or complete tax evasion. I was at a conference on May 5th, and 4 people came up to me and told me they don't even file tax returns at all. So there's a lot of non-filers. The biggest number one mistake people do make when it comes to cryptocurrency is not realizing that when I trade one crypto for another, I go from Bitcoin to Ethereum, that's a taxable event. Most people think in terms of like-kind exchange. They think I'm only taxed when I go to cash. And that is a big mistake. You're taxed on every sale or exchange. It doesn't matter if it goes to cash. That's the number one mistake most people fail to understand.
So let's just start with kind of the basics here, right? I'm going to kind of throw out different scenarios to you of things that you can do in the cryptocurrency world, and you explain taxable or not, and are there certain things people can do to mitigate the tax burden that they have, or if they just got to pay taxes. So the first is if I buy Bitcoin or any of the other cryptocurrencies and I simply hold it, taxable or not?
Not taxable. There's no tax on hodling. That's the great news.
All right. So there's no taxes on that. What if I simply buy and then I spend my Bitcoin? Is that a taxable event if I buy a good or a service using Bitcoin?
Right. So you buy it, you convert it to Litecoin or to Lightning Network, you pay for something. When you convert it to cash, at that time, that's effectively a sale. Even though you exchanged it for cash, it never actually went to cash. The fair market value, US dollars, at the time that transaction happened is considered the proceeds.
What about in terms of staking? So I've bought an asset, I'm still holding it, but now I am actually staking it on one of these networks. Is that a taxable event?
This is up for debate. The guidance is not clear. The IRS said they're going to come out with better guidance. The two choices people have are, do I pay taxes on the price that I received it at, or do I wait and only pay taxes when I sell it? Ultimately, you'll pay the same amount of taxes. What may vary is the rate, especially if you hold it more than a year. Most people feel that the conservative position, let me just put it that way, the conservative, when accountants talk about conservative with taxes, it means that's the solution that gets the IRS the most amount of money fastest. That's why it's conservative. So that's, be taxed upon receipt. Most people have difficulty with that because they're saying, hey, you're taxing me, but I haven't made any money off of this. So they would rather do tax on sale. There was a big court case that kind of got scuttled, but the idea is they use the example of a baker. A baker is not taxed when the loaf of bread comes out of the oven, but when it's sold to a client. Same thing with like Ford Motor Company. Just because a car rolls off the factory line, they're not subject to tax on their income at that point, not until they sell it to a dealer or a customer. So that's kind of the analogy, and it's up in the air. You can kind of choose whichever way you want to go. I recommend that whichever way you go, if you go the pay on sale, that you should at least annotate that in your tax return in case there's a dispute.
Now, when we look at things that are taxable versus not, many people I know will simply say, hey, I use X exchange or I use X platform. And when they provide me paperwork at the end of the year, I simply just take that and I include it in my tax filing or I send it to my accountant. They don't check. They don't actually look to see what the accuracy of that information is. In your experience, are many of the documents that people are receiving from these exchanges or platforms, are they actually accurate? And is that okay for folks just to go ahead and forward it on to their accountant or kind of their tax preparer? Or do you suggest that people actually go through line by line and check transactions and make sure that the documents are accurate?
The ones coming from crypto exchanges are all wrong. They're all wrong. And the reason they're wrong is that the rules they have to follow to come up with those numbers for the 1099 forms are not the same rules you would use to report it on your tax return. And they typically come out, they're distorted, they're much too high. We're spoiled with stocks and bonds because if you buy it on one brokerage and sell it on that brokerage, they know what your cost was, your proceeds was, and they can give you a end of year statement, as you refer to, a 1099B, which states exactly what your gain is. It's so easy. Give it to the accountant, you're done. But with cryptos, you can't. The difficulty is matching the buy price up with the sell price.
And what you mentioned that those documents usually overstate what the tax burden would be. In your experience, is it overstated by 50%, 10%, 300%? Like how much are we talking about here?
Well, each exchange is different. So one example would be BlockFi when they were issuing 1099s. Every time you took a loan, they treated that loan as proceeds that would be taxed, which is not. Loans are not taxable. Another problem was with Coinbase when they stopped doing this after it happened. They report all the proceeds, but they don't report the sales, and it gives the IRS a very distorted view of how big a trader you are, especially if you're a high frequency trader. They could come up with a very high distorted number, and you have to explain why that is.
So let's talk about kind of the process. Once somebody goes ahead and prepares all their taxes, whether they use the accountant, a tax preparer, or they do it themselves, they then send it to the IRS. In your experience, how much of expertise is sitting within inside that organization? I tend to think that many of these government organizations are doing the best they can. They're good, smart people that are working there, and they simply are limited by either bureaucracy or capital or something else. But is it something where there's a disconnect between the industry and the nuance and the people who are actually receiving these documents? Or have you found there actually to be a very high degree of knowledge inside the organization and therefore there's less miscommunication?
The IRS knows they got a problem with understanding cryptocurrency. I mean, when we had a booth at the Consensus conference, and I had 5 IRS agents come over and introduce themselves to me. It turns out this was a team, including their manager, who were appointed for a project office last October to help the IRS gear up for more enforcement by having more training, better guidance, better internal instructions, and they really wanted to understand what was in the industry. They're all great guys. They're all well-meaning, but they wrestle with being able to understand. And part of it's the culture of the IRS. Like I can explain things to them, but they can't talk to me. I'll tell you an example, a real life story. I buttonholed one of these guys. At the end of the day, I he's going out the door. I said, "Come, let's go have a beer. Let's talk. We have a lot to talk about." And he's the guy who's in charge of giving guidance to the legal department in terms of what the issue, in terms of guidance. We had a beer together. He had to pay for his own because he's a government employee. And I said, "Excuse me, I have to go to the bathroom." I went to the bathroom. There's a guy. He says, "Hey, Clinton, I got to talk to you about my taxes." He's meeting me in the bathroom. And I said, he starts telling me he hasn't filed any tax returns for 5 years. I said, "Would you be willing to come up and tell somebody at the IRS that confidentially?" And I dragged him right up from the bathroom. I said, "Look, this is how easy it is to find a non-filer." So, he asked, the IRS agent asked, what would it take for him to become current? And I thought the response was very interesting. He said, "If I knew that you wouldn't change the rules on me, then I would tell you. But I'm afraid you'll change the rules after I file my return. And that's why I'm not going to file." I mean, that's a genuine emotional fear. I'm not sure how true that statement is, but how he felt about it. So the IRS cares, but inside the audit organization, they have a team of specialists. There's 23 of them that are the cryptocurrency specialists, and they operate in the dark for the most part. They struggle with all the complexity that you and I would struggle with, but they don't have the ability to really engage like you and I do with other people to sharpen our understanding.
Explain that a little bit more in terms of potentially having the rules changed afterwards. Is that something that's happened in the past, and kind of how likely is that, or is that something that you are concerned with?
Oh, I think it's a big issue. So, for example, the IRS came out with a notice, which is just simply, it's non-binding. It's a notice 2014-21. And they came out and said cryptocurrencies will be treated as property. Up until then, they had never said anything. Now, all of a sudden, they're property. And that was basically retroactive. So many people had to go back and fix their tax returns or not. They have the freedom to make things retroactive or to have interpretations of the law be applied retrospectively. Just because the IRS hasn't said something doesn't mean that the law doesn't apply to that particular topic. The silence is not freedom for the individual.
When you look at people who haven't been filing, I'm assuming that out of everyone who's watching this video right now, some of them haven't been filing. What should they do? Right? What is like the actionable thing other than just call you, right? And you'll take care of it for them. Like, what are some of the things that they should keep in mind to make sure that, one, they're doing things the right way, but two, also that they're protecting themselves, they're getting the right information to the right people? Like, what are some of those steps that they should be following?
Well, first of all, we need tax amnesty. We can't have this limitless go back and crush people with taxes from 2017. I created a website, cryptotaxamnesty.org. Go there, basically explain, it's a letter to the commissioner, call your own senator, your representative, and say, we need tax amnesty. That would be a very good thing to do. Secondly, directly to your question, if they haven't filed, the first place to start is to calculate the gains. In fact, basically say, what is it I haven't reported? Now, if it's a small amount, we might look at that and say, well, why bother? If they audit you, it's a small amount to pay. If it's a big amount, we need to think about what your choices are. Do you have the money to pay that bill? If you don't, you are in a position where you have to make a decision. You can either amend it now and owe a bill, or maybe you wait for the IRS not to get it. I mean, it's a professional risk. Of course, we should all be compliant with the laws, but some people get so far behind on their taxes that to comply with it would just wipe them out financially. So we understand, and we've done over 1,200 tax amnesty tax returns, helping people get current and getting back into compliance. But what you don't want to do is be out of compliance. At the very least, start being compliant this year. That you can control. And a lot of people are afraid, wow, gee, if I tell the IRS about my cryptos this year, they'll figure out I didn't report it last year. They don't look at the data that way. That's not how their systems work. Their systems are so backwards and antiquated, they don't compare things that way. So start by being honest and complete this year. Next year, do the same thing. Next year, do the same thing. Pretty soon, you'll be compliant. That's the simplest strategy, at least to getting towards a compliant position.
What's the worst situation that you've seen so far? Either somebody, like, what's the most amount somebody owed? What's the longest somebody went without reporting? Or kind of just like the absolute worst case when you point and you're talking to a potential client, you're like, let me tell you about this. And this is not, who you don't want to be.
the don't want to be. I had a client who had made a lot of money. He owed basically $1 million in taxes, but he hadn't paid it. And then the prices went down and down and down. And now he wants to be compliant, but his price values are so low, they can't pay it. This is a big issue. I talked to one company, created NFTs on one of the blockchains, popular blockchains. The three of them created NFTs. They made $5 million in the summertime. By the time the end of the year rolled around, well, they made out of that 5 million, they paid $500,000 to themselves and their vendors. The other $4.5 million worth of the coin they kept in that coin. And at the end of the year, somebody told them they had to pay taxes. Oh, really? Well, that $4.5 million was now down around 1 million, and it was not enough money to pay all the taxes that the four guys would owe. And so they're in a position of, do we even file a tax return? That's the position they were in. You don't want to be in that position. I have a client who came to me after he pleaded guilty to tax evasion. He had received Bitcoin from an individual who mined the Bitcoin. These coins had never been on an exchange. And my client sold some of it off on an OTC desk, and then he wrote it off as a charitable deduction on his tax return. One day, two men from the IRS showed up at his doorstep. These are the guys with the badges and the guns on their belts, and they wanted to talk to him. His wife was there. He basically met them in the office. He took a couple lawyers. He pleaded, Fifth Amendment, wasn't going to share any information to them. They said, well, we'll be watching you. A year later, he gets called by a district attorney saying that we are sending you an indictment. We're indicting you for tax fraud. Turns out the IRS had discovered his Bitcoin wallet address. They dusted it with Satoshis. And now every time he does a transaction, one or more of these Satoshis goes with it and discloses itself along the way to the IRS to see where that money was going. All that was left once the IRS had sent the district attorney had sent the indictment, all that was left was the plea bargain. Because you don't have to prove exactly how much you evaded. As long as it's there, it's just a matter of the plea bargain. He got sentenced to a year in jail, paid $240,000 in fines, and he had to go back and do all the tax returns that he hadn't filed and get current and pay the interest and penalties on that. So he said, if I had it all do over again, I would have paid the taxes up front. It just wasn't worth it. And as he said, it's not just that I went to jail. Actually, he got 6 months in jail, 6 months parole. It wasn't just that I was that, but for the rest of my life, I'm a felon. He said, what's the likelihood when I get pulled over for going a couple miles over the speed limit? Policeman looks at my driver's license, runs it through the system, finds I'm a felon. You think I'll get off with a warning? No. The rest of his life, he's tainted with this crime. You don't if that's you and you're in this position, there's probably some people watching the show that are, non-compliant. Don't stay there. There's hope. You can get back, move towards compliance, start to get compliant, and you can save yourself a lifetime of grief.
There's people who are asking questions about the IRS tracking transactions. You just mentioned kind of dusting wallets. Explain a little bit more about kind of how that technology or those processes and systems work.
Well, the dusting of a wallet, a Satoshi is the smallest, it's 1/1,000,000th of a Bitcoin. So it's kind of like pennies. And with the way Bitcoin operates and a lot of the other cryptos that are based like that, whenever you pay something, you got to come up with an exact amount, which generally involves some pennies. And that's how the Satoshi works. Now, the question is, how do they discover his wallet? That's a great question. And he does not know the answer. How does the IRS, I would say right now, people should be should not doubt that the IRS knows who all the crypto traders are in the US. They have been gathering that information. They had demonstrated as early as 2019. They knew who the whales were in the United States. They know who all the crypto traders are. They can find out from Coinbase, from Kraken, all the on-ramps and off-ramps. We have accounts. They can learn that. They can then associate that to your wallet addresses. They can track, they have the tools to track the wallet addresses. They can watch wallet behavior, and they can say, oh, this must be his. Now that we know this wallet is his Coinbase wallet, we can see that this is his KuCoin wallet as well, because he keeps trading with that one, and they can start to build a picture. Why haven't they cracked down more? There's two reasons why the IRS hasn't cracked down more. One is a lack of staffing and funding, which the recent budgetary approvals have fixed. The second one is IRS has to be careful about how it cracks down. If there's too much of a backlash in the public, then senators and congressmen all get riled up, and the IRS doesn't really want that. So what the IRS usually does is it works on the concept of fear. They try to scare people into compliance, and it's an effective strategy.
When I think about anybody who's ever talked to me about taxes, who I've ever seen working on their taxes, et cetera, it always reminds me of the Donald Rumsfeld story, where Donald Rumsfeld, who obviously was in prior administrations, he used to every year send in his tax returns, and he would send a one-page letter. And on that letter, he basically would say, I'm a college-educated person. I've worked in the administration. I'd like to think that I'm smart, intelligent. I work hard, etc. I have no clue if my tax returns are accurate or not, and therefore I'm doing the best I can to estimate this. I hope in my lifetime that the tax code will be simplified so that the everyday American would be able to file their taxes without the fear of being inaccurate, but also without having to employ tons and tons of other people to help them do it. Now, there's a little bit of like tongue in cheek and it's kind of a cute story, but I do think that there's this underlying thread of what he was saying in that letter that he would send every year, in terms of there's a lot of folks who are saying, look, I'm doing the absolute best I can. I'm not malicious. I'm not trying to do something that is nefarious. I want to be in good standing, but I don't know. And so how do you work with clients to make sure that they have confidence that when they're actually reporting this information, whether it's to you or to the government, that it is accurate and they can have confidence that they're doing it the right way?
Well, great question. First of all, the tax code is complicated, not because of the IRS. It's because of Congress. It's all because of Congress. Congress says, oh, we need to give a break, and we want to make tax code progressive, and we want to give a child tax care allowance, and we want to phase it out once they have over $70,000. They create all this. They create the complexity. In terms of not understanding it, everybody, first of all, it's just a shame that our educational system, that people can graduate from high school without ever actually seeing a tax return, understanding what it's like, when it's one of the major ways that they interact with the federal government the rest of their lives. All right. So blame the public education system for keeping people ignorant. Secondly, educate yourself. Start young. When you're young, all you have are a W-2 and a 1099 before you have a company, before you have investments. And when you get your tax return done, you should demand that whoever's preparing that tax return explain to you what you're looking at. Most people start out in life, they might buy a copy of TurboTax, have TurboTax do it, which that's a start. There's nobody to talk to. But eventually you move on to talking to a human. Eventually, as you start to make more money, then you start to realize, I need a professional, I need a CPA. So you have a complicated tax return, a CPA is preparing it, he says, here, sign it, we'll file it. I think you should demand that they step you through the tax return so that you understand what's on each page and why it's there. That's how most of us learn how the tax code affects our daily lives. We work hard for all the money we make, and the government's going to take a third to a half of it. So understanding your taxes is as important as learning how to make more money.
What about tax software? There's a lot of people who are asking about those questions in terms of, how accurate are they? Can I depend on them? Some of them are very expensive. Some of them are relatively cheap. How do you think about tax software versus working with a tax professional?
We'll break it into two categories in terms of tax software. In the crypto space, we also have gain calculation software. But let's just talk about the tax software itself. First of all, big picture, 48% of American taxpayers pay no taxes. So they file a tax return that says zero. Now, it's not that they don't owe taxes, but they also get credits. This is a form of welfare that Congress has put in place. So you get a child tax care credit, educational credits, you get earned income credits. All these things offset the tax bill so that you don't owe anything. Well, people in that space are very interested in getting all the credits they want, and that's the space that TurboTax, Tax Act, H&R Block, Liberty Tax, that's who they cater to, the masses, the big volume, and they charge actually higher prices. At least Liberty and H&R Block charge a higher price than you should pay. Now, the percentage of the population, say the 40% that make more, have more complex tax lives, actually are paying taxes. In that case, you're going to start to reach a point where TurboTax is really not designed for you. There are actually sections of TurboTax that you're prohibited from using. Why? Because it's complicated and they don't want to jeopardize their 100% accuracy guarantee. So, for example, cryptocurrencies is one of these. TurboTax does the absolute minimum it can get away with crypto taxes. In fact, they sell this. They call it tax audit. They call it tax audit. $50 more, they'll guarantee you. You read the small print, does not cover cryptocurrencies. So this is common in that whole space. They're really not interested. They're really focused on getting your credits, not for the wealthier taxpayer. Then you have to move to a CPA. You want to make sure, or enrolled agent, someone who's certified to do that, not a amateur accountant. The IRS is actually looking at coming out with their own software. They're experimenting with this year, but so they're going to try to come out with their own freeware, if you will. That's actually maybe a good step forward, but it's only going to service the lower people. If you're making a lot of money, you owe it to yourself to really get a professional to do your tax return. In my opinion, a good tax preparer, what he saves you will pay for his whole fee. It's money well spent.
So there's really two different parts of these tax preparation services, or some people use CPAs, et cetera. Basically, there's what I'll consider kind of the initial preparation of the documents and helping somebody actually file their taxes. But then there's also this whole audit component to it. Can you describe what exactly is an audit? Are the audits specific to an individual? Are they specific to maybe just assets? Could you be audited just for cryptocurrencies or for something else? How do these audits actually work?
Okay, so we have a voluntary tax system. Most people laugh at that, but it's voluntary. Like, you tell the IRS what you made, and then they statistically select people based on certain compliance programs who they're going to audit. And they audit people in order to increase the compliance rate. We know from the taxpayer inspector general that income that you receive that's not reported on a 1099, which oftentimes will be cryptocurrency, that the inaccuracy rate, or the rate of non-reporting that, is as high as 90%. So this is where the IRS zooms in on what happens in an audit. Their computers detect that there's a couple areas they have questions on it, and it might be cryptocurrency, it might be business expenses, whatever. They will send you a letter saying, we're going to audit you. There's two different types of audits. One, more common audit, is just a computer-generated letter. Looks like you didn't report some income. This is what we calculate you owe. If you disagree, tell us. Otherwise, we're going to bill you. That's a computer-generated audit. A human audit is the more fearful thing, because then they're really going to spend. It could last a year or two, and they're going to dig right into all the areas of your life. They're going to look at all your bank account statements, credit card statements, financial records, and look for any underreported income. When that happens, it starts with a letter saying, we'd like you to provide all these documents, which are all the ones I just kind of mentioned, including with cryptocurrencies, all your addresses, all your list of all your wallets, all your exchanges. We want copies of all the transaction records for the time period under audit. And usually when you're audited for 1 year. All right. So it's not your life that's being audited. It's just 1 year, and it's usually a few years back. So typically the IRS is 3 years after you file a tax return to audit it. Once they get that data, they're going to hand it over to the crypto specialists. They take a long time to get it done. They may submit it to a contractor to do the gain calculation. And then we eventually argue over what that amount is. I've actually done over 40 audits, defenses of cryptocurrencies before the IRS. And we have developed an incredible methodology. Actually, at this point in time, I get a 30% refund rate from the IRS. The national average is less than 0.5%. What does that mean? 30% of the time when the IRS comes after one of my clients, they end up giving them a refund. I had a guy who had got audited on 2017, 18, and 19 on his crypto gains. He'd made a lot. He owned a few companies. They were auditing his business expenses. Once they saw the crypto, that's all the auditor was interested in. We answered the business expenses quite quickly. The next year was on the audit defenses. I was able to file a like-kind exchange claim to reduce his taxes on 2017 cryptos. And in the final result, because we recalculated all the gains, we didn't go with his numbers. We ended up getting him a $52,000 refund. That's what I call, that's how you beat the IRS. And we're beating them 30% of the time, they're actually shelling out cash. We just had one happen last week. So you can beat the IRS.
When you and I first met, you were telling me about a program that you were, I think, just starting to design. Now it's live, and I find it fascinating. Where there's almost like an insurance policy against audits. Describe a little bit, kind of what this program does, and kind of how people can use it to really, I think, have peace of mind moving forward.
This is exciting. We started doing this in 2019, and we've matured it. We have the ability to. We offer 4 different price points. The lowest price point is simply monitoring your IRS accounts. It's a $12 a month offering where we will monitor your IRS accounts. We'll give you a monthly statement, and it'll show all the different categories that we've monitored. It'll be red or green depending upon whether there's a problem. And if you have a problem, call us up. We can work to fix it. The IRS is watching you. Why don't you watch the IRS? I mean, this is like Netflix pricing, and this is incredible. There's literally nobody else in the entire tax profession offering this sort of thing. We've spent hundreds of thousands of dollars to automate this. You start with the monitoring offering, and then we added on top of that a protection component for at the higher price points, but the higher price points $249 per month, where if you are selected for an IRS audit while you're a member, we will defend you at no additional cost for the entire life of the audit, all the way through appeals and to tax court. And this is really significant because the first thing we do in an audit is we're going to recalculate your gains. Depending upon the level of trading activity, that could be, $5,000 to $10,000 or more, depending upon your complexity. When the IRS goes through it, sometimes they come up with their own gain calculation. And then I have in-house forensic accountants that literally dissect and destroy the IRS calculations. We just did one. We identified 3,000 errors. We identified it and annotated it. And if we can, under Section 7491 of the tax code, if we can show to the IRS and court that show to the court that the IRS has fundamentally made mistakes, then the burden of proof shifts back to the IRS. The court doesn't believe the IRS anymore. And that's what we got 2 of these going on right now. We have one where they claim that the person owes $1.5 million. We say, no, he's entitled to a $13,000 refund. And we've dissected it. We've proved all the errors. So this is what's going on. We've with that offering. Hey, I digress. But one of the biggest fears you have in an IRS audit is that it's very slow. And if you're married, generally only one of the spouses was a trader in cryptos, and the other spouse is angry because I've heard it before. I told you not to trade those cryptos. You got us into this problem. You didn't make any money. Now we're being audited. And this creates marital strife. It's not unusual for people to get divorced going through an audit. It's not unusual for it to be massive emotional and tension throughout the entire life of the audit. And the cost keeps going up and up and up if you're paying for a lawyer to defend this. And typically lawyers they may know the law, but they don't understand cryptos. And that's where we're going to win this battle. So it just gets more and more expensive, and people will pay to get out of that fear, to get out of that burden. With our audit defense program, it's capped, especially at the top end, $249. You have nothing to worry about. We keep fighting it all the way to tax court. It's just $249 a month. We'll take care of all the costs. That's what an insurance policy does for a car, and that's what we're trying to offer, that sort of comfort to clients now. And again, there's nobody else in the industry who has the track record of doing this number of years we have. It's all automated. We do KYC. You have no risk from the IRS coming after you because you're using this service. Your rights are protected, and it's absolutely incredible. And at the $12 price point, you can't go wrong. The information you're going to get is just priceless. We can actually detect 2 to 6 months in advance when the IRS is going to audit somebody. We had a guy, he got a pre-audit flag, which is what we call that. We saw that in the IRS records. He hadn't filed tax returns for 5 years. We quickly worked with him to calculate his gains, prepare tax returns, filed them before the audit began. He avoided an accuracy penalty, and the audit was shut down before it even started. So this is what I mean. Protect yourself. You can watch what the IRS is doing.
Where can people go if they want to find out more about that product?
So my company is Crypto Tax Audit, cryptotaxaudit.com. The special $12 promotion is only on a special webpage we have for this show, cryptotaxaudit.com/12, $12. So go to that website and you can take advantage of it. It's a money back guarantees. Yeah, I think it's just amazing.
Now, one other question that I've heard people talk about around taxes is the relationship between the IRS, the SEC, and a variety of other kind of alphabet soup number of organizations. There's all these 3-letter, 4-letter type organizations that people are saying, hey, do they all talk to each other? Is there any connection or relationship between one decisions from an organization to another's? How do you kind of underwrite this? We've obviously seen a crackdown from the SEC in terms of crypto exchanges. Does that have any impact on individuals' taxes or things the IRS might do?
Well, I'm glad you mentioned that. Most of those agencies are all departments of the Treasury. And anyone who's read The Creature from Jekyll Island understands that major financial strategy is not left up to the President of the United States. Financial power brokers who have significant interest in keeping the US the dominant world power in finances orchestrate these events. And that's why the US is the global leader financially that it is, the reserve currency status. And in fact, the US is the largest tax haven in the world. Why? Because they're trying to attract world money to the US. And it's interesting that a lot of people have been pointing to Gary Gensler, and this is the guy who's running amok. He's single-handedly trying to destroy the entire crypto industry. He's trying to beat us back to the Stone Age. There's this Twitter perception. I think this is far from the truth. He is a cog in a bigger plan and of very creative people, and they have a goal. The question I ask is, well, what is that goal like? What's he trying to do? Nobody is out there trying to say that distributed ledger technology is not instrumental to the future of financial technology. Nobody is trying to go back to the abacus. But if you look at what Gensler has done, he's come out and said, Binance, Coinbase, you're operating unregistered exchanges. Now, on the surface, that doesn't bother people. But then he accuses them of financial fraud and deception. That bothers people. What's the antidote to that? Registered exchanges. And these Binance and Coinbase have chosen to not take the steps to become a registered exchange. Now, in terms of orchestration, let's just step back and look at this. In March of 2022, President Biden issued an executive order telling Janice Yellen, the Secretary of Treasury, to work with all the other departments in the government to come up with a cohesive strategy within the next 6 months on how to handle what they call now digital assets. At the end of the 6 months, what came forward was basically 3 papers. They railed against the evils of stablecoins, and they talked about the need for a CBDC. And then they said, Yellen said, we're going to come forward with more regulations in 6 months. Well, guess what? It's almost 9 months, and we still don't have these regulations. Now, I got to look at that. And they're not even talking about these things coming out. And I'm wondering, maybe the regulations that are coming are already here. And that's what we see the SEC doing. They're forcing regulation of cryptocurrencies inside the securities framework that they have. And people don't like it and scream about it. But this is how we got the Howey test. They applied these rules, and the court came out with the Howey test. I expect that at some point, whether it's the XRP case or a later case, a judge is going to make a more principial judgment to expand the ruling of the Howey instruction to embrace the idiosyncrasies of cryptocurrencies. I expect that to happen. That's what they're pushing forward. Why don't we have any extra regulations? Because they're waiting for the courts to do the work for them. Now, some people have called the Gensler's move choke point 2.0. Well, perhaps, but I don't think his goal is to destroy cryptocurrency. He's merely sweeping out the unregulated to make room for regulated exchanges. And in fact, we do have regulated exchanges now. I was talking to the president, John Palmer, at Cboy Digital, Chicago Board of Exchange Digital Group, They already have an exchange for institutional investors. They're trading Bitcoin, Bitcoin Cash, Ethereum, and Litecoin. And they're actively trading these institutional level. They're fully regulated through a number of different regulatory bodies. And at the same time, we have Fidelity Investors is doing the exact same thing, Franklin Templeton. They're all prepared to offer the exchange and clearinghouse services that broker dealers are going to look for when they jump into this space. I think what you're going to see is the Merrill Lynch's, the Goldman Sachs, the Vanguards, they'll all start jumping into trading on these institutional platforms of cryptocurrency. When that happens, this is going to be fantastic and exciting because massive amounts of money is going to flow into these coins and drive those prices up. Now, it's massively exciting for that purpose. The average crypto investor who trades in, let's say, the unregulated Wild West is going to be very angry and upset. But this is how the U.S. power brokers sweep out these small players and replace it with a much more powerful engine. Now, when this happens, nothing in this space happens without several other regulations coming together. I'm sorry if I'm going a little bit longer for you, but the AML rules come to bear as well. The AML rules put burdens on banks and financial institutions to exercise due diligence to make sure that there's no laundering of terrorist money or illegal funds. So when a bank gets a transfer in from a crypto exchange, it's automatically a red flag. They know there's a high level of illicit activity that's happening, and these coins might or might not be related to it. It's difficult for them to know. For example, Citibank, one of the largest banks in the United States, has a very low risk appetite for cryptocurrency. I have a client who had in his bank account at Citibank $5 million. I mean, how many clients have $5 million in their bank account? This is a big client. You work hard to earn these clients. He transferred in another $1 million from Coinbase. Citibank said, nope, we reject that 1 million transfer. They closed his account and they mailed him a check for $5 million saying goodbye. Think about that. Think about how hard it is to work for a $5 million client. Why would Citibank do that? The reason is that when you get a transfer in from a crypto exchange, that's by definition a high risk transaction. They have to exercise enhanced due diligence on that transaction. The industry average is roughly 5 hours of work to validate if that single transaction is a profitable transaction. If they don't exercise this due diligence, there's people at the bank who will suffer significant fines. The bank could suffer significant fines, and or people could go to jail. So they have no appetite for this sort of thing. Now, the SEC has said, "Oh, Coinbase, you engaged in financial fraud. It's an indictment." Well, now that's just heightened the risk on every transfer from Coinbase. So how does the AML fit into this regulatory chokehold? Well, it's now made it so that there's going to be very few banks that are going to want to accept a transfer, or let's just say there's a lot fewer banks that are going to want to accept a transfer from Coinbase because of the AML restrictions. And now this is not a Coinbase problem. I mean, people with a Coinbase account aren't going to be blaming Coinbase. They're going to be blaming their banks because their transfers got rejected. The off-ramp is the big issue with this new increased regulatory enforcement. And in taxes, I'll stop there. I'll tell you about the tax side next unless you have any questions about that portion.
Keep going. Yeah, no, I'd love to hear.
All right. Here's what happens with tax. We talked about that one non-filer who was worried about the tax law changing. Let me tell you how easy this is. And I have on my podcast, the Clinton Donnelly Show, I have a show or two on this topic. All the IRS has to do is come out and say that cryptocurrencies will be treated as stocks and securities. They just have to issue that announcement. The tax code has a very rich set of laws governing the taxation of what they call stocks and securities. So it's always that phrase, stocks and securities. And so if they do that, then cryptos be taxed the same as stocks. Now it gets ugly. Most people say, hey, cryptocurrencies aren't stocks, they're not corporations. No. In section 7701, the tax code defines a corporation as including an association. What's an association? Association is an unincorporated group of people working together for a common goal. Hey, sounds like Bitcoin mining to me. And then shares represent ownership in this corporation, aka association. And that basically is everyone who owns a crypto or a Bitcoin or Ethereum. You participate in some level of ownership, however small. I mean, we even call these organizations DAOs, distributed autonomous organizations. This would be considered a corporation under the tax code. All this is in place. All the IRS has to do is say cryptos be treated not just as property, but as stocks and securities. Now, here's where it gets worse. Back in 1986, with the tax code changes that came from President Reagan, in order to protect the mutual fund industry in the United States, they put in place some laws that would chase out foreign mutual funds. They're called the Section 1291 of the tax code, passive foreign investment companies, otherwise known as a PFIC. What's a PFIC? It's basically a foreign mutual fund, but it's a passive company. It's a foreign company that all it does is investment. Well, guess what? Every DAO no DAO is incorporated in the U.S. Bitcoin, Ethereum, none of them. They're not incorporated in the U.S. Therefore, they're foreign. They are investment companies because, according to the law, 75% of the income comes from passive activities, or 50% of the income comes from passive assets. So it clearly qualifies as a passive foreign investment company. Why is that important? Well, the tax code on the passive foreign or on a PFIC is this. We'd spend another show explaining how this is complicated, quite complicated. Bottom line, the tax rate is 40 to 60%. Now, if you're faced with that tax, what are you going to do? How do you get rid of this tax? All they have to do is say that, and now your tax return this year, any sales will be taxed at that 40 to 60% rate. Well, what if you could move those currencies to a U.S. brokerage like Fidelity, and you had them at Fidelity in their custody? Well, now they're not subject to the PFIC tax because brokers are allowed to invest in foreign corporations. So this is going to drive a lot of people to move their money into this regulated bullpen of trading. So what we're seeing is this is going to just a small change. All they have to do is issue a statement, and this law comes into effect.
Clinton, my last question for you, as we kind of look at, what's going on now, what you think are potential solutions that could increase compliance, bring more people into kind of that regulatory bullpen, as you called it. When you sit down with a client, what's the main message you try to get across to people around cryptocurrencies and taxes? You mentioned earlier coming to compliance. What else?
Well, hey, you want to come into compliance. You want to, as you trade and make a profit, you want to set aside some of that profit for paying your taxes. Most people just reinvest that profit into the next transaction, the next trade, and then they get bitten and they've basically gambled with their tax money. You can make a fortune in cryptocurrencies, but by paying taxes, you're going to save yourself a world of hurt. And you want to make sure you're interacting with someone you can trust. If you are like Rumsfeld, don't understand it, get a second opinion.
And if somebody is interested in learning more about what you all are doing or understanding in terms of what the product offering is, where can we send them?
We can go to cryptotaxaudit.com. Our company, we do gain calculation. We're confident enough in gain calculation. We actually fix price it for like small, medium, and large. And most of our clients fall into the ugly category. So we do know what we're doing, and we do it very well. We also prepare tax returns for crypto investors, complete tax returns, but we put extra things in there, things you wish were in there. If you knew in advance, you're going to get audited by the IRS. And we still have room and capacity to do. If you're still wrestling with your taxes this year, give us a call. Go to the contact button at the top of the webpage, schedule a call with me or with one of my staff, and we can talk about the complexities of your situation, put a custom plan in place to help you get your taxes solved and fix past tax problems or tax debt.
And then you have a podcast and Twitter. Where are those that people can find?
It's on YouTube, Twitter, Spotify, Apple, Rumble, all the normal places. It's called the Clinton Donnelly Show. Very, very creative. If I had a 4-letter name like you, it would be much easier.
Clinton, I appreciate you always taking the time to do this. I learn something every single time we talk. We've done a bunch of stuff in the past and partnered on different events and things like this. And I think people really end up learning quite a bit. And education is kind of a key piece to this, and demystifying a lot of a process that people obviously are worried about, and I think mostly want to be in compliance. So I appreciate your time. Anyone who wants to check it out, go to cryptotaxaudit.com, and we'll definitely do it again in the future.
Thank you very much, Pomp, for having me on. As I end all my podcasts by reminding people that taxes are sexy.
All right. We'll talk soon.
Bye-bye.